Hello and welcome to Core Finance. I'm Matt Brown. I'm joined today by Tim Harrison from Linear Investments. How are you today? Or Linear Wealth, I should say, with apologies.
Good morning, good morning.
Lots going on in the market, but more on the M&A front. I think you were speaking to me off air with regards to what you're doing trading-wise.
Yeah, we had a nice little touch on a company called Refresco, which is a bottling company. Looks quite healthy as a standalone business, but I believe it's a French company, PAI, have gone in for the company with a reasonably sensible bid, which appears to have been accepted this morning. So a nice little shoot higher in the shares this morning, which is always a nice way to start the day.
Fantastic. And they're a bottling company?
Yeah, so fizzy pop bottling, if you like. So sort of a junior Coca-Cola bottling company, if you like.
Understood.
But no, it's further consolidation, and as I've pointed out, I think the next couple of months could be quite interesting on the M&A front. We've seen quite a bit so far, but I think things could really pick up.
Perfect. Unfortunately, the Coca-Cola Hellenic bottling company, their chief executive has passed away. So, but that's also another company that I've been talking about of late that's worth looking at in the bottling space. Performing quite well despite their sad loss.
Yeah, well, that's very sad news, as you point out. I mean, the whole drink sector is in pretty rude health because it's always in demand, and obviously costs. If you can maintain a relatively strong cost basis, then it's almost a license to print money. But with the drink sector, you've seen the likes of the Bottle Greens, et cetera, really, and Fever Tree, et cetera, really pushing forward. These guys, they need to get their bottles from somewhere, and the companies like Refresco fit that bill quite well.
Fantastic. Thank you very much for that. Looking at the market movers today, US markets at all-time highs. Japan hits 2-year highs. Albeit energy stocks are weighing a little bit, oil is down slightly today. Some big moves for the US markets, onwards and upwards. I think you've got a stat for our viewers.
Yeah, I believe it was 43 record closes on the Dow this year. And I was actually talking to one of my analysts yesterday when I heard that little bullet point as to what historically, when you are looking at the tops, the bubbles bursting, if you like, what's the statistical numbers behind that in terms of record closes prior to a correction. But the US is just firing on all cylinders. Obviously, a lot of it is talk with regards to the tax reforms in the US, which is causing investor appetite, because ultimately if they do manage to push through the tax reforms and these companies do choose to bring their money back onshore, then it could be another wave of pushing the markets even higher.
Understood. An old adage from an investment manager I once knew said, bull markets don't die of old age. So we'll see what happens there.
Stand by your beds.
Indeed. Tin hat time. Moving on, Greg's FTSE 1 to watch. It's actually in the 250. Some good numbers today. Pies, pasties, sandwiches, etc. Bricks and mortar. I mean, you don't buy Greg's pasties on the internet to order. So people are buying, there are footfall. I think they're doing quite well in the railways, etc., up and down the country. So an interesting story.
Well, the company's gone through a massive restructuring over the last 5 or 6 years and looked to put their outlets into motorway service stations, railways, etc., where you do get passing footfall, as opposed to the high street, which has been dying a death, over the last couple of years. So they've really changed their modus operandi, etc. But it's very good value, and where people's pockets have been pinched, you can go in and buy a bacon roll and a cup of coffee for a couple of quid. It really does fit the bill of just filling a hole in your stomach, so to speak. It's not somewhere where you'd go out and have a full-on meal, but for a snack, it has taken business away from the high street, if you like, the more traditional retail outlets. That being said, you've got the likes of your Pret-a-Mangers, etc., who are continuing to drive forward in terms of sales growth. So these sorts of outlets are, an area to watch. And as I say, with Greggs having restructured the business and changed their focus, if you like, to more fast food and good quality fast food, they seem to be hitting the price point quite well.
Fantastic. Moving on, we've got an AIM one to watch. Purple Bricks, I believe we've spoken on the show before, certainly about this company, and they've moved into LA. A good move for them?
Well, again, it's Neil Woodford will be hoping so. It's one of his largest positions, and obviously everyone knows what a disastrous couple of months he's had on some of his more popular names. That being said, Purple Bricks, the online estate agency is a great business because there is very little overhead. They've got their pricing right in terms of going at the lower end of the market in terms of the pricing to sell, if you like. And I think the company seems to have overcome their initial teething problems post-IPO, and by diversifying into alternative areas, sometimes you do see that as potentially getting a bit away from their core business, but it's good to see another British brand name spreading their wings further afield.
Fantastic one to watch. Looking at the pound, well, trading below the 133 handle, it was seen as a key resistance level. We had some bad PMI construction numbers due out today showing September we're actually in contraction, so not good for the industry there. So the pound really giving back a little bit. We've had some bad macro data points over the past few days. I think the market will reassess, and certainly Mark Carney will be looking a bit worried about potentially having a rate hike this year.
Exactly that. I mean, as I've said, I think the British economy is in reasonably strong health, and you are seeing a lot of the FTSE moves. The 100, 250 are really just a dollar play at the moment, and I'm looking forward to the day when traders aren't just focused on what cable is at and what to buy and what to sell, and actually looking at the fundamentals of companies. But I think at around about the 132, 133 level, it seems to have stagnated around that. I can't see it popping back down towards the 128 level. I don't think that would be warranted or justified unless the UK really does start to contract ahead of Brexit. That being said, as I've said before, I do see sterling continuing to or starting to push higher as people start to realise that brand UK is A-OK. Understood.
And looking at the core number, now I picked this out. I'll tell you what it is. It's the number of airports that have been built in China between 1995 and 2016. Now, it's a huge number. These are big hubs, civil airports. When you compare this to the dilly-dallying we've seen over the third runway at Heathrow, has it come to a point where the UK, albeit we're in rude health and moving forward with businesses, we need to be more aware of what we're doing? Do we need to build more airports to attract, for example, Chinese tourism to this country? Are we a bit too in the kind of PC health and safety going? Is there too much bureaucracy now for us if and when we move away from Europe to be a global leader?
It's got to be surely a case of working out where your target market is. Now, obviously, the UK, we have large airports, yes, we do, but they are with very short runways, which aren't suited for the larger new planes, which need a long runway to obviously take off and land. So therefore, there is a very good argument for a larger expanding of Gatwick, Heathrow, Stansted, wherever it may be, to allow us to attract the long haul flyers from China and the Middle East, etc. It would appear that a lot of them are flying into our European peers, which is obviously not great for British tourism per se. That being said, Britain is very unique in that people want to visit our country, so they will get here come what may. Furthermore, you have got on the lower end of the scale the likes of the Monarchs, the likes of the Ryanairs going through their troubles at the moment. So I think there is an argument for expanding our network. Not so much in terms of the size of the airports, but the length of the runways to cater for what we need, which is big payers. Your large aeroplanes bringing in tourism into the UK to float around the West End of London, looking at Buckingham Palace and spending their money.
Fantastic. Onwards and upwards, hopefully. And finally, looking ahead at the economic calendar today, nothing really to write home about. FOMC member Powell is speaking. Non-farm payrolls on Friday.
That's what everyone's bothered about right now. And I think you'll see the markets kind of tread water over the next few days until we see that. And if we do see a solid number, then you'll probably see the markets react accordingly, both on equities and also the currency. Okay, so payrolls on Friday. I'm off to Greg's to get some sausage rolls. On that note, Tim Harrison, thank you very much for joining us.